happy 62nd independence anniversary to all Nigerians today. As we reflect 62 years since independence in 1960, our conversation today will be on the economy, and our focus will be on Nigeria's 62 creative ways for attracting foreign direct investments and private capital. My guest today is Dr. Ayo Teriba, an economist and CEO of Economic Associates. Nice to have you, sir, on this special edition.
Thank you very much, Otto. It's my pleasure to be here.
Yes.
Happy 62nd
anniversary.
Independence anniversary.
Yes. So, Doctor, let's first begin with the journey of commercializing and privatization. Commercialization and privatization are very key areas for economies to achieve development and transformation. How would you describe Nigeria's trajectory in this regard?
All right. The way privatization is generally understood in Nigeria, where one has to be a bit careful that the history of privatization has been such that we tend to regard it as something that is remedial. If you have state-owned enterprises that is comatose or is underperforming, as a matter of fact, we wait until some of them, you've tried every way you can reform them. You consider the option to privatize them at the point of liquidation. So the reason why you push them into the privatization space is the company is in liquidation, and you now want to privatize the successor, companies based on the assets that is left behind. That was how we did the NIPOST. That's how we did PHCN or NEPA.
NEPA then.
When the enterprise fails, then you talk about privatization. That's a very wrong conception of privatization. It's a wrong conception of commercialization. There are 4 elements, that you want to consider. One is liberalization. In other words, sectors that have previously been under government monopoly
and now liberalized.
You liberalize them. You allow new entrants, typically private entrants, or especially not just private entrants, foreign private entrants. That's liberalization. You don't have to wait for the sector to collapse before you do that. It's something you do to reinvigorate a sector, bring new capital or bring new technology into the sector. The other one is commercialization. That's an activity that used to be provided for free based on whatever consideration, now to be provided for a fee, by a user fee. That's commercialization. You don't need to wait for the sector to die before you do that. There is securitization, which you can only do with an income-generating enterprise. In other words,
that's the word, income generating. That is
enterprise
potentials.
That's right. Okay. In other words, you are looking at the company, let's say a state-owned company,
enterprise,
to be securitized or securitizable means that it must have a market value. You must list it in the market, and you leveraging on the market value is called securitization. Saudi Arabia listed Aramco about three years ago, and the current value of Aramco is above $2.4 trillion.
The bottom line is that it's $1 trillion plus valued company.
It's 2.4 trillion. It's not.
That's what I say. Almost over the value of, I think, Apple or other.
No. Yeah, well, it's in rivalry with
yeah,
Apple.
Yeah.
For a few weeks, Apple will be higher.
You can
For
imagine,
a few weeks, Aramco will be higher.
Yeah.
Point is that before 3 years ago, Saudi had the company, but its market value was not known. And therefore, you cannot securitize it. Since Saudi knew its market value, it could approach capital markets and raise money, leveraging on its shares of Aramco. The point to emphasize, Saudi listed only 2% of Aramco.
Only 2%?
Yeah, 1.9%. So Saudi, as we speak, owns 98.1% of Aramco. So you cannot say Aramco is not state-owned. But it's been listed and Saudi is securitizing it. Saudi is using its Aramco shares to raise sukuk abroad. Okay? Presumably, with its shares as the basis of the sukuk. So it's eating its cake.
And having it.
And it's having it. Wow. That's the advantage that securitization gives you. So we shouldn't create the impression that you need to go the whole hog of selling.
Selling off your...
They haven't sold Saudi Aramco.
They just securitized.
But as long as the world knows that that company is worth 2.4 trillion, it creates elbow room for Saudi to borrow money at very favorable terms. The thing is, their debts, their debt issues are rated by global rating companies as investment grade. So
investment grade.
Yes.
Yeah.
So you get yield that are just slightly higher than the rate at which the US government will borrow. In profit, they don't pay interest on the sukuk. And so it's not only strengthens your balance sheet, it also provides you liquidity. If push comes to shove, the quality of the debt that Saudi is issuing is such that because they are asset linked, they're convertible into equity. But the point is, it can go on for 30 years, issuing securities based on the shares that you own without selling your shares.
The whole entity.
So I do not want us to create the impression that this is about selling.
Because the labor people, they always have that concern.
It's the wrong impression.
Yes.
Yeah. It's in the interest of every Saudi that the market value of Aramco is now known. Saudi's economy is about $150 billion GDP economy.
$150 billion.
$850 billion. $850 billion.
As we have 350 plus of us.
You now have one company worth 2.4 trillion.
Valuation.
That's right. So the core of your strength is not your GDP, is the assets that you own, the value of your national assets. So the lesson for Nigeria on its 62nd anniversary of independence is, what do we own?
What do we own?
What do we own? Saudi owns Aramco, worth $2.4 trillion. And all of the state-owned companies that Nigeria owns, none has a market value. We have not listed any of them in any stock market, either at home or abroad.
None of the state-owned enterprises have been listed in the
None.
markets.
Including NNPC, including LNG. Nigeria has no equity issue at home or abroad. Nigerian government only has debt issues at home and abroad. And that weakens us.
There's the debt issues, which sometimes are like junk bonds or
treasury bills, FG bonds
yes.
at home,
and then
Euro bonds abroad.
Yeah.
So Nigeria, as a country, never approached equity investors. So when you say, how do you get foreign investors to come to Nigeria? The problem is not the foreign investors, because Nigeria approaches foreign investors
or in a different manner
to come and buy our Euro bonds. So we issue debt, and our debt gets oversubscribed. We never issue equity. So if you want foreign investors to come to your country, offer them equity, and they would come. Are we together?
Yes, Doctor.
Historically, we've had isolated cases of offering equity. LNG, when we offered investors opportunity to own 51%, they came.
And LNG is a very good example in terms
Unfortunately, the step that we missed is we never planned to list LNG.
Our own part.
So the only gain we can make from LNG is the proceeds of the gas that it exports. The asset value of the LNG is locked, and the only way to unlock it is list it in the market. It's not complementary to any country to own half of LNG, a 6-train liquefaction operation. You own 49% of that, and then you show up in the Eurobonds market wanting to borrow
$1 billion or
$1 billion, wanting to borrow $1.5 billion.
Doctor, that leads me to the next
You are in slumber. Wake up. Go and list LNG.
Our own equity. What we have.
The way it's done, you can list it in the home country of any of the joint venture partners. You know, LNG as a company should be listed. It's to the benefit of everybody, all the owners. At least you have a market reference value for the assets, and valuation gains will open a new source of wealth to you, because as the value increases, and you don't even have to sell. You could securitize your own component of the equity ownership. So maybe Nigeria wants to list all the companies that the government owns and mandate all of them to be listed on stock exchanges, including the refineries. The idea of we can't list the refineries because they are not functional and their value will be low is untenable. List the company in whatever condition. The market price will be low, but as you improve the asset, the market value will go up. So you can't, we've recently gone to borrow $1.5 billion to invest in the refineries, $1 billion. Okay, before you invest $1.5 billion in a company, I would ask you, what's the value of that company?
Yes.
What justifies, what makes it worth
to know the valuation of our companies?
So that's one category of assets. Companies. And I emphasize that.
So let's come to another part. So I know that this is very, in short, what you've already said now is very insightful and shows clearly where we are really lagging in terms of attracting inflows. But I want to speak further to how Nigeria, who in the 80s and 90s had that prospect of attracting a lot of FDIs, even down to the turn of the millennium. Now, just the recent capital importation showed we had FDI inflows of $147.60 million, lagging behind countries like Brazil, India, and Saudi Arabia, where we even had an edge early with prospects of attracting more FDIs.
There were no prospects of attracting FDI as such in the 80s. The surge in FDI is a post-1990 development. in the 80s, the whole world suffered a global debt crisis, which meant that liquidity dried up. Nigeria at the time was in the post-oil boom phase. We were broke because oil prices had collapsed, and our debt had ballooned. The euro-dollar debts that we got before we got trapped in it when the oil boom ended. And you had nowhere to turn to in terms of attracting capital inflow. So in those days, in the 70s, in the 80s, and even early part of the 90s, some part of the 90s, you end up on the IMF World Bank operating table. You end up in structural adjustment.
Yes.
It was that time.
And SAP really affected us.
And so many developing countries suffered that fate, that in the absence of capital, global capital, because of the debt crisis, you go on the IMF operating table and you lose control of your policies fiscal and the strategy. Rest of that. Yeah. But all that is history. In the 90s, certain developments, innovations, unlocked new sources of capital. Up to the 90s, about 80s, up to in the century up to 1990, the main source of foreign investment were multinationals, who were the main exporters. So foreign investment then was a reinvestment of some of their export profits in destination markets. Okay, so the investment space was dominated by multinationals.
Yeah.
But in the early 90s, with the advent of the internet, that led to many startups.
Yeah. Leveraging the
that unlocked in the internet, truly created a global village in which assets that had been considered illiquid at different ends of the world now became liquid by virtue of the internet. And so many startups were the initial beneficiaries of such liquidity. They call them the dot-com companies.
There was a dot-com boom. So.
It triggered a dot-com liquidity boom. So it created a parallel driver of foreign investment to the multinationals.
Yeah.
So whereas up to the 90s, producing, particularly for export, was the primary source of liquidity. Innovation with the internet, innovating, in which many startups rapidly become unicorns.
Yeah.
If you look at the top global companies today, many of them are the dot-com companies that many didn't exist prior to 1990.
Yeah.
The ones that did exist, that dominated the world prior to 1990, have been overtaken by these newborns.
Yes.
Microsoft was, came around in the 80s, but it was still an underdog.
Yeah.
By the 90s, the IBMs loomed.
They were there.
But where is IBM now? The other things.
Yeah.
The Apples of this world, the Microsoft, the Amazon, the Facebook, are all overtaken.
Yes.
Those old giants. So you have new giants driven by innovation. So emphasis was that producing for export was the main source of liquidity prior to the 90s. Post 90s, in the age of the internet, innovation is the primary source of liquidity.
Yeah.
Okay.
So now, look, based on what you've said, you've brought this concept and re-emphasized the need for financialization, where countries like Nigeria can attract more FDIs and even private capital. If you could just speak briefly on this and how this plays out, considering the fact that export-oriented policies may not be that lucrative as before, and of course, how that can help Nigeria at this critical stage as we are looking for capital. I mean, recently President Buhari was saying that they need more foreign direct investment and private capital in the country.
Okay, generically, there are two routes to wealth. And historically, up to 1990, before the age of the internet, there seemed to be only one route, which was production. So the only way you created wealth was to produce. Yeah. With the advent of the internet, a new door has been opened. Not so much about production, much more about innovation. So, two routes to wealth: you produce or you innovate. Now, the production route led to industrialization. The emphasis was produce on a large scale, trade, export, and the rest of it was all production centric. With the advent of the internet, deindustrialization has set in. That the value of global production might have peaked, and industrial activity, manufacturing activity, exports have been declining. Are we together?
Yeah, I'm getting.
So industrialization is increasingly being eclipsed by financialization. And what's the link?
Yeah.
So production is something you capture on your income statement. It's about output, it's about sales, it's about net output, it's about margins.
Yeah.
Not only is the value of income statement, peaking and stagnating or declining, margins are shrinking. And the pressure is coming from the balance sheet.
Balance sheet is very key.
And the link is that in the age of innovation, it is not about production. It is not about output. It's about assets. It's about what assets do you own.
It's not about manufacturing.
It's about valuation of assets. And it's about capturing valuation gains. So you can say it's a battle of transactions against portfolios. So portfolio optimization is a better ticket to wealth in this age of internet, in this age of innovation, than production. As a matter of fact, production increasingly is being automated. Okay? Engaging in production activity puts you at the risk of rivaling with machines, with robots. So, robots or machines is somebody's asset. So the asset owner will capture all the gains that are available in the production space. So value chains are usually, partitioned into three stages: upstream, midstream, downstream. So traditional production activities has been, pushed into midstream. That's factory, assembly line, that's the farm. The margins extractable from the midstream, in the factory or in the farm is shrinking. More of the values that are extractable in the value chains are upstream or downstream. And what matters
in essence,
upstream and downstream is what asset you own. that helps you to conceive a product, the patents that you own, or what assets you own that helps you to market and distribute the product.
The right value.
Okay, so unless you have assets upstream and downstream, you're not going to get much from assembling anything, because very soon robots will run the farms, drones. Very soon robots, drones, will run factories. Are we together? And human input altogether will be pushed. For example, in transportation, cars will drive themselves.
Yes.
So
driverless cars.
Yeah, if you see the drivers as the midstream of the transportation value chain, the midstream is being squeezed. So drivers input are commodities. Okay, and eventually even that commodity will not be in demand anymore. So question is, what do you own? We have mentioned the leading companies in the world.
Yeah.
If you look at them, they are innovation companies. They are deploying assets that enables others to produce. Deploying assets that enable others to consume. For example, what does Facebook produce?
Yeah.
But Facebook has innovatively created an asset that every producer needs to use.
Yeah.
And it takes away from whatever margins they can get from production. What does Apple is described as a factory-less manufacturer. It contracts the production, the assembly of its devices to third-party countries, to third-party destinations. But Doctor, it creates asset base in terms of patents, in terms of brand, in terms of product design that it jealously guards. Then it ring-fences its market. Everything, whether the gadgets or the accessories, whatever, you have a closed market. So they capture value from the design stage upstream. They capture value and they leave the midstream to whoever is happy, to run that for very slim margin.
So interesting insight on financialization. As we wrap up, next year, Nigeria will mark 63 years and we'll have a new government on board. With all these insights on creative ways of attracting FDIs and private capital, what should be the focus? Just in a minute, what should be the focus of the next government? What should
the long and short of this conversation is that the economy is increasingly less about what you produce. It's more about what you own. In that, the impression, has been created, particularly in the age before the age of internet, that the economy is about production, is about growth, is about export. Yeah. Now that we've seen over the last 2-3 decades, since 2000, 2 decades, that production is slowing and balance sheets are growing. And that the path to wealth for either any company or any country is what they own. Dubai owning a city that works for all brings more wealth to Dubai, as everybody wants to be in Dubai because Dubai enables wealth creation. Everybody wants to be in Dubai because Dubai enables leisure. Just like everybody wants to be in Facebook. So the owner of Facebook, the owner of Dubai, the owner of the city of London, of Boston, of Cambridge, of Oxford, capture wealth from all economic activities because they enable the productivity of us. So what does Nigeria have? Which city do we have that we could elevate its asset value to the level that Dubai and other top cities have been elevated to? What digital assets is accruing to Nigeria that we can earn value from. Human capital. India today is reputed that leading companies in the world
are led by Indians.
Indian CEOs. Regardless, of where the country is, the United States, Europe, etc. That's India's asset. So these companies are not producing in India. But wherever they want to produce, they need an Indian asset to lead the team. So which human capital does Nigeria own? So in the end, it's a question of, I've spoken about cities, which is, which places do you own that you could unlock the place value sufficiently that everybody that wants to produce feel that they must be there. You'll be wealthy. I've mentioned spaces like electronic platforms. I've mentioned Google, I've mentioned Amazon. So which digital space is yours, that you can generate wealth from? And I've mentioned human capital. So it's about places, the wealth you own as places. It's about spaces, that's a digital capital. It could even be your patents, your intellectual property. And it's about skills. And companies could be created as special purpose vehicles to harness the value of your digital capital, or harness the value of your human capital, or harness the value of your places, of your cities. So Nigeria needs to think assets, needs to think about how to generate wealth from assets rather than just thinking production.
Thank you very much, Dr. Ayo Teriba, CEO Economy Associates, for this very clear insight on what we must do to attract foreign direct investment and private capital. You talked about thinking assets, thinking spaces, places, and skills, which is very important. And you've thrown a challenge. I hope that by the time we turn 63, we'll have 2 or 3 major assets listed on the market, because through that, we can create value and attract more inflows and boost the economy. Thank you once again.
Thank you very much. Happy Independence Anniversary.
And that was a special 62nd Independence Anniversary session on the economy, looking at Nigeria's 62 creative ways for attracting foreign direct investment and private capital. We had Dr. Ayo Teriba, CEO Economic Associates, giving us insights on what we must do. So as we brace up for Nigerian elections, hopefully those contesting will take into consideration what needs to be done. And of course, the government at the moment will also look at the ways we can address the challenges of attracting FDIs and private capital. Thank you once again for the opportunity, and have a great day.